Okay. I'm watching this video. Somebody told me to watch this guy from Daily FX. And he's going through the news headlines and he's talking about trades and how to make, I think he's trying to make money trading. Now, this guy is supposedly, I don't know, I'm just going to go, people are going to say, oh, you're bashing all these people. Well, yeah, I guess I am because I just don't get it. Like, shouldn't people be thinking about their trade plans, and are they looking to this for some type of insight to kind of get more certainty on their trades?
They raised it another 2.3 billion euros to 83 billion total, an indication that there was indeed a need for liquidity, if we didn't already know that after they decided this past Friday to bundle all their payments back to the IMF. But once again, further progress, but also an indication of how intense the situation actually is. We are getting to, when we talked about this on a regular basis, and the market talks about it even more frequently, we're getting to essentially a make-or-break decision. It's not going to be politicians that make the next move if they continue to drag their feet on a negotiation and a compromise, but rather it's going to turn into a financial situation where the markets themselves decide that this is ultimately a liquidity crunch. All right, and if that's the case, then the drain on liquidity, as we see in the banking system in Greece, which, according to some reports, has...
Now, what does that have to do with you trading the market, either on a monthly chart or a 5-minute chart?
Been accelerating the past couple of days, potentially leading to capital controls. That is an instigation of something far more severe, and that is something that we cannot necessarily negotiate very easily. And if we thought that negotiations as they're going on now were relatively easy, it gets even worse if they don't resolve this situation before it becomes a financial crunch. Now, the euro is going to be something we have to keep a constant vigilance on. And if you're looking at any euro-based currency pairs as trade potential, do recognize that it's going to be very difficult to generate follow-through or a break or a range trade, and really it doesn't matter your time frame, doesn't matter your direction. It's going to be really difficult to trade.
I don't know, John Kicklighter, but can I just suggest that if you think about it, I think trading is risky. And this guy's risk adverse, so he's got all this garbage up here to try to get the risk out. That's interesting.
Given that these constant headlines are working against a market to build...
There's no range trade. There's no follow-through. You might as well just not trade.
Build into momentum. All right. Euro-USD doesn't necessarily provide the setups that you would expect are immediate opportunities.
Really? Well, apparently you've never traded.
If there is a resolution on the Greek standoff or the negotiations, and it's a positive one, a move above 115 might be an opportunity. All right, if it is, it turns into...
So you're going to sit on your hands, and you're going to miss out on the rally into 115. Okay.
To a disaster, which is a increasingly greater probability as we move each day without a solution, then I'll be looking for a move down to 110 and more likely than not lower than that.
Oh, 110, huh? I don't think it's coming back, Jack.
All right, but until we get clarity on it, it's not something that is actively tradable because we will be taking a bet on not necessarily a market direction, because the market...
Now, did you hear how he said the word bet as if it's gambling? And, it's just, this is adorable. I mean, this guy is working for Daily FX, and could he just please get a better microphone system or put a compressor on his mic or something? For God's sakes, man.
Market direction has to take its cues from what the outcome of this standoff is, this negotiation. And that is something that is not worth taking a position on unless you have a very high tolerance for risk. And I don't have that high of tolerance for risk.
He doesn't have any tolerance for risk. You notice that?
But a couple other pairs that look very interesting, but we have to be very cautious of. Euro-pound, some short-term opportunity here between 72.50 up to 80.84. All right, good opportunity there, but not something I'm going to trade. Euro yen, which tried to make a nice break of this congestion pattern after two very distinct phases in a rally. All right, not going anywhere. Immediately loses traction. This is actually a very interesting currency pair because of the impact that we had from the Japanese yen. And that will be a specific topic of conversation today.
And mind you, this is the chief currency strategist. Of course, it's daily FX, which I think is tied to FXCM. I think it's, right?
Today's video. The Euro Kiwi, massive move, critical technical break potentially here. But I'm not going to trade it.
Listen, this guy's just not going to trade. He's not a trader. Look, he's not going to trade that. He's not going to trade that. What does he want? He wants this he wants this fundamental news to give him certainty. He's going to wait for Wednesday FOMC. He's going to wait for everything, and then he's going to wait for all the ducks to line up in a row perfectly. I mean, this guy obviously is amateur. How does he get this gig being the chief currency strategist? I want this job. I want to just be completely vague. Make a living being vague.
This was instigated by the RBNZ rate decision, another topic for today's video, but you're not going to be able to follow through on it if you're concerned that the euro might turn into a financial crisis.
Oh, see, now here's where you cloud your brain with, oh yeah, like I'm in this trade, but what about the headlines and this? How would that even make a difference? Besides, look at the bottom here. Is it just me? Did you not buy down here? Like, who didn't load the wagon down here, right? What is this, 100? This is like 500 pip handles on this thing or something? I don't even know. I don't even trade this pair. Like, Euro NZD moves so hard, so big. Now, this guy's waiting for this breakout here. Like, where was he down here? Like, why did he buy that?
Because this requires a bid for the euro, not just a sell-off of the Kiwi, if you want it to continue. And that is quite a stretch to assume. And we have just as appealing setups on the likes of Euro CAD. All right, look at that congestion. Nice floor down here at 138. Potential, if we can clear this channel once again, getting above 140, 141. All right, but not something I'm going to trade unless I see a...
Not something he's going to trade because he doesn't know how.
A clear view of what's going on in Greece. I'm not going to trade it for a breakout, although I might consider a range trade depending on the circumstances.
And just his comments are disabled for this video. That's weird. I wonder why.
And Euro Aussie also providing a nice rally to the upside, and with the upcoming Aussie employment data might be a nice catalyst for reversal or continuation. But
the data's moving the market. What about this sell-off here? I wonder what the news was there. Like anybody that's really into this fundamental and technical analysis, which is kind of like, I mean, isn't that just a conflict of interest? I mean, the idea that the ultimate is to line up the technicals with the fundamentals. Really, I mean, fundamentally, the whole market's built on uncertainty. And if you don't like risk, don't trade, right?
Given the euro's influence, it's just something that I'm not comfortable trading. All right. So
he's not comfortable trading. I think he just said it right there. Thank you. Thank you very much. Thank you, Mr. Kicklighter.
Knowing that this event risk, and we talk about this in the lead up to non-farm payrolls, we talk about it in the lead up to rate decisions, it's best not to get involved in a trade on the...
I guess he's a position trader. I think he's getting in. What are you getting in with a 500 pip stop? And yeah, I guess you don't want to go on an NFP with a 100 pip stop in 40 yards of currency.
These high potential volatility pairs, if you're uncertain of the outcome. This is especially...
If you're uncertain of the outcome, don't trade. I think if you drive to the store today, I can almost guarantee you probably won't get in a car crash, although it's more dangerous than flying a plane. So I don't know, really?
True when the outcome is so nuanced, so vague.
Well, vague. I mean, wow. Yeah.
With a rate decision, I know if they're going to hike, cut, or offer no change. If it's not farm payrolls, better or weaker than expectations, or meets expectations. It's pretty straight.
Trading is counterintuitive. The idea that when they raise the interest rates, you're going to buy that currency because fundamentally and logically, it sounds like a good idea, right? I mean, wouldn't the currency go up? I mean, it pays better rates than everybody else's, right? Well, how wide are you going to play the stop on that? And what makes you think there's not going to be some that the banks aren't going to roll their books over and you're going to get chopped out even if you have a 1,000 pip stop?
Straightforward. For Greece and its negotiations, it's ongoing. We have no clarity.
No clarity. I mean, all this guy is doing is filling your head with garbage fear. That's all this guy does. It does it for. This guy is this chief strategist. Are you serious? When can I start? Please, somebody hire me to be the chief strategist of logic and reason. Like, hello?
Unless they decide that they're going to exit from the Eurozone or they're going to receive additional funds. Right? And everything that we see in between those two outcomes is a point of speculation.
Yeah, I think I'm a speculator. I don't know what this guy is. I think this guy wants to get a house, get a car, and just live a perfectly undangerous life.
And certainly a problem with generating market traction.
Market traction? Sounds like he's a trend trader.
Now, if we want to contrast that uncertainty to something that is very decisive, the RBNZ rate decision this past session was incredible for market movement. Right. Taking a look back at that Euro Kiwi that we were looking at, this ended up being one of the more interesting ones. A nice technical break. Too bad the Euro is a conflict to this, because if it were just up to the Kiwi and the Euro was free to move, that would be a tremendous technical break and certainly a strong reasoning for finding follow-through. What did the...
Notice he used the word reasoning. He's looking for the market to make sense. He's not interested in risk, chaos, uncertainty. He wants traction. Traction denotes that he wants something physically that, you can see when you take your car out and you give it throttle, you'll notice it gets traction on the, if you're in the snow, you got nice traction tires, right? He wants something that makes sense.
The RBNZ do. They cut rates. They cut interest rates. Now, this was not necessarily unexpected. It was just unexpected by the majority of the market participants. If we were looking at the overnight swaps heading into this rate decision, there was about a 44% probability that they would have cut. Look.
Somebody sent me this chart, and bless their heart, I looked at that thing for a long time, and I couldn't figure it out, and I just didn't know where to put my stop.
Looking at the economists that were polled by Bloomberg specifically, there was about 38% of them calling for a 25 basis point rate cut to 3.25%. That means the majority were anticipating no change. So when we did realize this rate cut, there was a lot of the market that was caught offsides.
Yeah, well, that's what I'm all about. I'm about contrarian trading, I guess. I'm about like, hey, let's put some orders in where the market hasn't been lately. Let's think outside the box. In fact, let's think without a box, and let's just totally turn upside down. Market. Trading is very perverse. It's very counterintuitive. It doesn't play out the way you think. I mean, it's just. I'd love to go back, and I haven't looked at this guy's stuff. Somebody told me about this guy, and there's another guy out there, this Jared guy, who's a complete clown. All these people are just clowns. I don't know how they get these gigs.
So they moved further into the dovish territory. Why is this so unusual? Why was it so market moving? Well, it's unusual because if you recall back in 2014, the RBNZ actually did pursue a regime of rate hikes. All right. And those rate hikes, when you look over at something like the Kiwi USD, were critical to the further advancement of the New Zealand dollar against most of its counterparts. But when it became clear that they were backing off, at one point they were talking about...
Okay, I'm tired. This guy's killing me. I'm going to go on to the next guy and rip him apart. Thank you. Thank you very much.